Hi there, everyone, and welcome into this week's market update. Now, don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so sorry you can't see my face today, guys. Camera is off, not working properly. So I will look to fix that by next week. So I apologize for that. But let's get into it. So markets creeping back up towards the 7,000 level. So this is XJO, one of our major indexes, top 200 stocks. Heading back to that 200-day moving average. Okay, you can see with the last few attempts at this level has failed. Third time lucky? I'm not too sure. I think we might see a little bit of a fakey breaky here over the next few days with the positive sentiment towards the midterms. I'll talk to you about that a little bit more in a moment. But really for now, guys, look, there's a bit of upward momentum there. I think we'll stop at 7,000 or maybe a touch above that before pulling back. Markets are still a little bit in the overbought area. We've had a pretty damn big run since 64, and the backdrop for equities is still quite negative out there. So I can't really see this rally continuing, but only time will tell. So zooming out, there's a bit of a pennant at play here. We've got some lower peaks through. Definitely a key level of resistance around 7,000, and then the base of the pattern at the moment around 64, with another key level of support in between at 66 thereabouts. So back towards the top of the range at this stage, and I feel we're going to fail from here at some point soon, but waiting for that signal before we trade that view. Now, getting across the S&P 500, what we're seeing here is something a little bit different, right? We've definitely got a bit of a stronger market locally than what they've had of recent, and we're back towards our recent highs. S&P 500 hasn't quite been able to do that at this point of time. Downtrend in play in every time frame you're looking at. So, longer term time frame comes in at 41. You've got a shorter term trend down through here as well that it needs to get through, with a base down here just below 36. The most recent trough was a lower trough than the previous. So clear downtrends in all those time frames on the US market. We've sort of been whipping around for quite a bit here. Spent a couple of weeks up just below 39. Tried to sell off, and we're bouncing back up into the midterms tonight. I think really that it looks a bit lost at this stage in the short term. Whippy, choppy, no consistent trend in play here, guys, in the short term. Medium to long term trends are down. So until that changes, I suspect further downward movement is on the horizon. Okay, so let's drill down into it, guys. So, the voters will go in and vote tonight. We'll see voting commence at about 10 o'clock tomorrow, our local time here in Melbourne. So, roughly when our market opens tomorrow is when they will commence voting. They'll start counting within a couple of hours after that. So I suspect around maybe 11, 12 o'clock, we'll start hearing a lot of commentary around how the counts are going. And, we'll start seeing people come out and predict whether the Democrats are going to lose their majority. And, we'll hear, probably a result on the House tomorrow and perhaps the Senate on Thursday. But we suspect, look, we won't really know until after market, perhaps tomorrow. So tomorrow's going to be sort of an interesting day of trade. But furthermore, Thursday is probably the bigger one because Wednesday night's where the US market will likely get an opportunity to react to the results. So for our market here, in Australia, we'll probably really react to this more so on Thursday. So that's the big one, guys. Okay, so midterms, look, generally speaking, people expect a 5 to 15% move from markets after the midterms. I don't think that's going to happen this time around. I think this is going to be that sort of one or probably 10 times in 100. That won't do that. Okay, a reason why I say that is this is a very different year than other years. The economic backdrop is very uncertain, and we've got a very, very hawkish Fed that we haven't had in a very, very long time. And we've got an inflation problem that could cause a stagflation problem, which is really something we haven't seen since back in the 70s. So for me, there's still a lot going on in the background here that's going to overshadow that positive sentiment that usually comes from the US midterms. Talking about the hawkish Fed, guys, basically we saw the Fed announce last week a 75-point rise. There was maybe a little bit of change of language in that. The result was really met with a positive reaction at first until Jay Powell came out and gave his speech. He gave the market a pretty sharp wake-up call that interest rates are not really seeing inflation fall yet, and that rates will have to go much higher for a longer period of time. Now, markets have not, in my opinion, still have not priced in those comments, and I'm suspecting that they're waiting for the CPI reading. Okay, so for me now, Thursday night's CPI reading is probably more important than the midterms. Okay, if that comes in high again, I think markets could really, really get punished. All right, so we want to start seeing inflation come off, and I think that's where if we see that, yeah, we could either hold gains or rise. I see the US market will probably rise a bit further. But at this point of time, I'm doubtful. I haven't seen any signs really that CPIs or inflation is going to start coming back down. Suspect it's going to stay elevated for a period of time, and that's making me a bit more bearish to market at this point. So happy to be proven wrong. If I am proven wrong, happy to quickly change views. But at this point of time, that's my view. I think CPI is going to come in high again. Market's going to fall. But you might have a couple of days in between up here coming into the midterms, because generally speaking, most people believe midterms are positive. You're going to see a little bit of buying coming into that result, and then we'll probably then really we're just at the mercy of that CPI reading. Okay, after that. The other thing worth talking about is Friday, the Chinese markets just completely took off on rumors that they're going to abandon their COVID zero policy. There's other talks around that they're going to try and promote more local investment. And look, that saw commodities go nuts. So Friday, we saw copper up 9%. We saw, metals across the board go up. Iron ore was up. And energy markets just completely flew. But over the weekend, some of those rumors were a bit debugged, and we saw a bit of weakness come back into copper overnight. But surprisingly enough, Chinese markets are holding quite a bit of strength. They had a reasonable session yesterday, and today's session's a bit mixed. But yeah, look, watch that space. What's going on in China, guys? Not too sure. News is pretty slow coming out of China these days for us. So really not entirely sure what's happening over there. But it did cause a mammoth rally in the commodities market Friday coming into Monday. So yeah, interesting space to watch, guys. And all I'll say is there's a lot of geopolitical risks around the world at the moment between Russia, Ukraine, the whole energy crisis that we're seeing, but also tensions between China and the US. So for me, there's not a lot of light at the end of the tunnel. Okay, we've got strong economic data, which is usually a good thing, but a bad thing at the moment because we want economic data. We want data to come in weak, so inflation will come back down. But if data comes in weak, the market's probably going to fall further. I actually, yeah, I think I'm feeling a little bit confused about what the market actually wants, and I can't really see a light at the end of the tunnel at this point of time unless inflation comes down, which I can't see happening either. So for me, guys, I'm still on the bearish side of the market, but that's more of a longer term view. The shorter term trading side of it, I'm sticking mainly to my technicals and choosing my key levels on stocks and indexes. So the index trading's been pretty good. The key levels on the indexes have been very reliable, and that's been really good for the trading side of things. But from an investment point of view, I'm still, majority in cash. Happy to sit there for a bit longer until I see a bit of a change in inflation. All right, so that's where we're at. Thanks for listening in this week. We'll be at the mercy of the CPI reading Thursday night, and we'll go from there. Take care and bye for now.